Okay, shifting focus to commodity markets now. We have Manisha joining in. Manisha, good morning. So what's the commodity on your radar?
So I'm looking at the crude oil prices because we've seen constant gains come in for this one. Well, last week was the first weekly gain after 3 weeks of decline. So we saw 4% of gains in the previous week. But overnight, it has been 2% of a jump up that we've seen in case of crude oil prices. And in this year, until now, it's 11% up for Brent and 13% up for the WTI crude oil prices as well. And it's not just the crude prices. The products have been doing quite well as well. But coming to the crude prices, and if you look at the way the month of June has panned out, we did not start June on a very strong note. Actually, we have seen a low of $77.5 a barrel on the lower side as well. But from where we've climbed up to almost 86 in the Asian markets today. So that has been almost an $8 of a jump up in crude prices from the kind of lows that we have seen in the month of June. So that's quite strong there. But as I was saying, the product prices also have been jumping. So if you look at the gasoline prices, they gained up by 1.5% overnight, 18% up in this year, 4% of gains for natural gas overnight, and 16% up in this year as well. So most of the crude and the crude products have been gaining on the higher side for the last 1 month or so, and various factors for that as well. If you look at the summer demand in US, that is expected to be on the stronger side, and that can lead to a draw in inventories. Well, there are various polls suggesting that you could be looking at almost 2 to 3 million barrels of a decline in this week itself. The other factor clearly comes in from China, where the May retail sales data has come in stronger than what the street was anticipating. So any strong number that comes in from China, the street starts to believe or wants to believe that you could be looking at the crude demand improving. So that's a sentiment impact there. The US crude inventories have been declining for the last 3 weeks, and this week as well could see a 2.3 million barrels of a decline. The other factor clearly comes in from the US retail sales itself, where the data has come in weaker than the street anticipation. That has led to a dollar decline and an expectation that you could be looking at a rate cut coming in for the month of September. That probability also has increased to almost 68% from 55% in the previous week. The fourth reason is the geopolitics, where the Ukraine drone strike has caused a fire in fuel tank and oil terminal in Russia's Azov port. So that's another reason to take prices on the higher side. And that is there is various statements also coming in from Israel saying that there is a decision perhaps coming for sure where they would go out on an all-out war with Hezbollah. So these are the premiums that also seem to be coming back in case of crude oil prices. But mostly it is short covering from the speculators that has taken the prices higher. And as happens in case of crude prices, once you see this movement pause or halt, you could be looking at profit taking coming back as well. But many of the banks and brokerages believe that with the kind of deficits that we are looking at or withdrawals in case of crude, the third quarter could see higher prices for markets.
Okay, all right. Thank you very much.